Let's talk about earnings, because not only did we have news coming in from the global front, we had news coming in from the budget. The earnings season is underway as well. Equitas Small Finance Bank, the bank saw its deposits rise 25% year on year, and the third quarter slippages too have seen a rise on a sequential basis. PN Vasudevan, who is the managing director and CEO of Equitas Small Finance Bank, now joins in to detail those earnings itself. Thanks a lot, sir, for joining in. Let's talk about your growth going forward, largely because your AUM grew by about 15% year on year. I remember the conversations that we had earlier. You had that 25% advances growth target. Where do you stand on that right now, and by when do you return to that 25% target?
Morning, and thank you for having me here. The growth for the 9 months has been 20% for the rest of the bank, and microfinance, which is 14% of the book, has actually been degrowing. It's degrown by about 11%, and that's why overall we have a 15% advances growth. The 25% that we had indicated earlier was at a time when microfinance was not seeing any kind of a stress, and microfinance would have grown, and the rest of the book also would have grown. But today the scenario is quite different, so we don't really expect the 25% growth to come in the very near term, but that's something that we should look at it from a more medium to long-term perspective. Right now we are actually not guiding for the growth for this current financial year, but definitely microfinance will continue to degrow, which means that overall the bank's growth will be to that extent impacted.
Okay, all right. Hi, Mr. Vasudevan, and good to see you, Ben. But as the microfinance degrows, that's impacting your NIMs as well. As a percentage of your total mix, I think MFI has come down to roughly around 14%. So what is the outlook on the NIMs? And also, I recall the last time you joined us, you had said that you're expecting the pain in MFI to continue. How far are we away from relief?
Yes, so as far as the NIM is concerned, we had a 30 basis points drop in the third quarter, yes, largely contributed by the fact that microfinance share of contribution has been coming down. Two things we expect to kind of support that in the next few quarters. One is that the micro loan against property, which we give for small business people secured against their house property, has shown a very good trend of growth, and the disbursement has actually doubled in the current year compared to the last year 9 months. And from a yield perspective, micro lab is kind of similar to microfinance. So as we kind of fill up that gap with more and more of our secured product, the yield pressure might come down over the next few quarters. That's one thing. The second thing is that about almost 80 to 83, 85% of our book is a fixed rate loan book. Only 15-17% is a floating rate book. And so last year and the previous year, we had a negative impact when the interest rates were going up, and we were not able to pass on that to the existing borrowers because our books was fixed rates. Now, if the interest rate cycle starts turning and the interest rates start coming down over the next few quarters, our earnings may not be impacted because, again, as I mentioned, large part of the book is fixed rate. We might actually see the reverse effect, and that might again support the NIM. So I think a combination of these two, we think that in another 2 quarters, I think the NIM pressure should ease.
What should the NIMs look like in the near term, from around the 7.3, 7.39%?
Yeah,
it might settle down around the 7% level.
All right, it'll settle down around that 7% mark itself. On your CD ratio as well as credit cost, you said that you'll have better visibility once we move into the second half of this year. What is, are we any wiser?
See, from a credit cost perspective, the rest of the book, which is our 86% of the book, the credit cost continues to remain very comfortable at around the 1 to 1.1% level. So we don't see any challenge as far as that is concerned. As far as microfinance is concerned, we had a 10% credit cost in the third quarter, largely contributed by the fact that our second and first quarter, there was a amount of slippage. See, in microfinance, what happens is it's a 6-month lag from the time you have a X bucket slipping into overdue to the ultimate period when the credit cost hits the book. It's a 6-month lag. It takes 3 months to become NPA and then 3 months for it to get 100% provided. So it's a 6-month lag. So our Q2 and Q3, our X bucket slippage was 98.2. At 98.2, microfinance continues to be a loss-making business for the bank. It has to reach a level of something in the range of 98.6 or so, at which the earnings and the credit cost will kind of even out and the product becomes a break-even. And when the X bucket goes to beyond that 98.6, when it goes to 98.8 or 9 or 99, that's when it comes back to some level of normalcy. So we have put in a lot of effort in the third quarter and second quarter, and there's been an industry initiative to also bring about some discipline in lending. And we are just hoping that, the fourth quarter and maybe the first quarter of next year should see an uptick on our X bucket. If that happens, then I think somewhere by second half of next year, things should try to come back to normalcy.
Okay, all right. Quick couple of points, sir, before we let you go. Your slippages, from around 500 crores on a quarterly basis, it's moved closer to around 600 crores. In the coming quarters, how do you see this number to move? And I understand that the problem is in the MFI basket. So how do you see things moving on a quarterly basis? Point number one. Point number two is as you scale up your non-MFI part of the book, the expectation is ROA will improve. So what is the targeted ROA?
Yeah. So as far as the gross slippage is concerned, there was an uptick, largely contributed by MFI. But if you see the net slippage for the rest of the book, the net slippage actually sharply improved in the Q3 because Q3 generally is a season of better season from a collection perspective, and Q4 will continue to be normally a good season for collections as well as business. It's an industry-wide phenomenon. So we expect that the CP should continue to improve in the Q4 and going forward.
All right, you expect situations to improve in Q4 and going forward. Wish you good luck, Mr. Vasudevan. Thank you so much for joining in and being so candid about the stress in the MFI business, but your points of moving away from that and improving your own business as well. With that,